welcome to today's episode of Derek Invests. I'm your host, Derek Miller. Yesterday, we talked about stocks that have high short interest. So, a lot of people betting on the shorts. And as we discussed yesterday, the benefit to high short interest is that it can create pops in price, upward pops in price, because every time someone who's short covers their short, they get out of their short, that creates what appears to be artificial buying. That creates big price moves in the upward direction. Now, on the other side of that, it puts a weight on top of that stock, right? So if you think of a spring, it's just this big weight on top of this spring. And the more weight that's there, the harder the spring pushes down. But also, when that weight comes off, boom. And that is why high short interest is one of the biggest drivers in a bull market, because people continue to get short, and they get short and they get short because they can't let go of the idea that the correction's over, or that the recession's over, or that the depression's over, and they keep piling on, and they're actually creating this extremely sharp bull market. Now, on the other side of that is what happens when you have low short interest. Well, then that particular company is subject more to its own company specific risks. If there's a lack of buying, so they will consistently need new buyers to step in for that price to continue to rise. So a lot of people think what you need for prices to fall is sellers, but that's not true. What you need for prices to fall, and specifically if you have no short interest whatsoever, all you need for prices to fall is a lack of buyers. If people stop buying, these stocks roll over, period, because no one's willing to pay for them at that price. So the bid just keeps falling until someone is willing to pay for that price. And then as that price rallies, it takes continuous new buyers to buy those positions. So believe it or not, stocks with very, very little short interest have a much more difficult time to continue a price rise, because they're going to need to be part of some new trend. Like maybe right now, AI will create a lot of new buyers regardless of what you're doing. You'll need to have a new product or a new service or new subscribers, some things that will actually have to happen for you for prices to rise. Whereas if you have heavy short interest, it can just be a matter of prices rising enough where a short covers and boom, there goes your price, because that is in fact artificial buying. Okay, so what we're going to take a look at is stocks that have very, very low short interest. Google, Walmart, LAX, Philip Morris, BDX, Mastercard, Eli Lilly, Abbott Laboratories. All right, let's get started. I'm going to share my screen with you now, and let's take a look. So the first one we'll look at is Google, Walmart, and LHX. Screen share. Here we go. So let's go ahead. Oh, this is from yesterday. This, by the way, is a company with heavy short interest, up 1.74% today. Here's another company that has heavy short interest, SMCI, up 2.5% today. All right, but let's get to the matter at hand. Google. Here we go. We're going to zoom out to a monthly chart. So there's a couple things to note here. One, obviously, there's a parabolic trend that occurred here. You had a heck of a retracement. Usually, typically it's anywhere from 50 to 75% as far as retracement from a stock going parabolic, which this one looks like it in fact did have 150 down to what's the low there, 83. That's about 50%. So let's go ahead and zoom in on a weekly, because that doesn't even really show us anything. And let's also remember that the short interest on this company is null and void. Now, does that mean that this company simply rises? No. What this company can be an indication of, and what all of the companies we're going to look at today can be an indication of, is how many buyers are actually in the market at present time. And so here we are on July, 8th, the week of July 8th, and this stock is just steadily fallen, which, definitely ties in with the conversation that I've been having, which is that there aren't a lot of actual buyers in this market. There isn't a lot of buyers right now, right? Like a lot of these stocks are moving based on a trend like AI, right, or semiconductors. Right now, tech's getting hit really hard. The Dow is definitely taken over as the strongest index, which is somewhat concerning because that's only 30 stocks, which makes it very easy to manipulate. That is the market weakness I've talked about week over week here. Yeah, you have something down here at 144. You have a gap down here at 144. Does this stock like filling? Does this company like filling gaps? Yeah, it sure does. Um, Daily. Let's also remember that Google was part of an antitrust lawsuit, and they have to break some stuff up. I don't know what it is. Right now, this 4 hour down here at 144, there's a gap, and up here at 183, there's a gap, which is actually a beautiful thing. If you watch me enough, you'll know that I just love gaps that are below us and gaps that are above us because it takes the guesswork out of trading. It really does. You can set up a position to run to in fact it's higher. I thought it was 140. Is that wrong? let me, let me go back here. 4 hours, maybe. Is that a bit behind us? Let me check the price on that. I just want to see what this gap is. Oh, yeah. So that gap is above that. Okay, it's what's the high there? 152. So it's 153. I'm sorry, you have a gap at 153 and you have a gap up here at 183. Call it 180 for argument's sake. 154 and 180. Let's zoom in. Here's your 180. Here's your 154. I would say that 154 looks like it's in the cards before 180. Let's zoom in a little bit and see what this tells us. All right, here is your 154. It's running up right alongside the market, which, is understandable. This is, a company like this is one of the reasons that tech is struggling so badly as compared to the other two indexes right now. Does this look like it shows strength or weakness? To me, you're just seeing a lack of buyers across the board. Now, the last few days have been low volume across the board, just very, very low volume. Everybody's saying it's because of the Powell speech. Perhaps it is. Perhaps it is. So what's the high there? 155. So if you were looking here, you would probably say that you are looking at 155. And then we'll go ahead and we'll put a longer term target on here too. Let's change these colors. Red. Oh, sorry about that. Let's go over here. Red. Okay. And let's change that back to 28. 9/18, 2024. So you would say for Google, you're looking at what, 155? 155. Today's the 18th. It's Wednesday. By Friday, I would say. We have really low volume, so it could take till next Tuesday. It's definitely possible. Target date. We can even put on, so what is it? If it's the 18th, 20th, 22, 23, 24, you can put on 9/24. Just because volume is so light, we'll go ahead and give it a little extra time to get there. But that definitely appears to be a good target price. It's funny. I take all these pictures, and sometimes I don't even get them all up. I like to take these pictures because on Twitter, I can post a lot of this stuff. And the goal is obviously not just to get people to watch price targets, but to tune in and look at what's actually being discussed. So if you have someone that trades, that is a trader or is an investor, or whatever terminology you use is fine with me, because the truth is, I believe those are the same things. And then we're going to look up here at we can even call 180. We'll give it a 180. We'll turn it back to blue. Text, let's go to blue again too. I would say this 180 you're looking at, we have to go to a 1 hour chart. So if you know that we have to go to a 1 hour chart, we're probably looking out about 6 weeks. It can be anywhere from 3 to 6 weeks. 9/18, 2024. We are looking at Google. 180. I am going to say that the market's going to get a little more active here, but I'm going to take this out 6 weeks anyway. Target date, which is going to be, call it, what are we at? We're at the 18th. So just say 11.5. The thing you have to remember right now is that we do, in fact, have general market weakness, but I believe we are simply, it appears right now as though we have a very resilient market, and until it turns into something more, until you can see some real selling at the highs of markets, there is no reason to believe that we are all of a sudden just going to tank. That doesn't make any sense. That's not reality, right? Markets take time before they're going to fall. Markets don't just start tumbling downwards. There's selling that occurs at highs. Why? Because there's a rebalancing of large money managers. That's why. Oh my goodness, look at that gap on a 1 hour. Well, we can see a target already, but let's back out and take a look at this thing. I'd say somebody believes in a very, very large recession, wouldn't you? Okay, let's take a look at Walmart. So it has a very low short interest at this point. I think at one point it had a very high short interest, and I think it was because everyone was looking. Everybody was looking at all the competition that was coming out of the woodwork on Walmart. I can tell you a couple things now that just, you cannot miss them if you understand gap theory, and this is one of them, and this is another one, and this just goes to show you that when you eliminate short interest, which I'll bet you if we went back and looked at some of these areas, you would have seen a lot of short interest, and now Walmart has the second least short interest being traded on the markets today. I'm not counting little penny stocks or tiny stocks that don't matter. But in your large cap world, Walmart is the second only to Google as far as lack of short interest. And look at that. I mean, that speaks volumes, everybody. That speaks volumes. I would imagine that's the covering there. And that also, that's someone exuding a lot of confidence in the company. Maybe too much. I don't know. I will tell you, looking on this 4 hour, I see one big bar here. I see another big bar here. And then recently, these sell-offs, they look, compared to what's directly around them and compared to what you would call average volume, I'd probably say average volume is like right there. They definitely poke out. So not meaningless at all. Certainly not meaningless. Let's zoom in a little bit here. Yeah, I mean, I would say you are definitely looking at the 68 mark as a target. Let's zoom in. Let's see how far we get. You're in on a 30-minute now, so you're within a month, I guess, I would say. It looks like there's a gap up here. Let's take a look. 15. Yeah, there certainly is. There's a gap up here at 80.50. You're at 78.50, $2, if that's something you look at. Do we see volume down here that would tell us that it wants this run up before the run down? Not necessarily. I would say that there's a large amount of volume here, and if this was in fact buying, you wouldn't have rolled off $2. There's a lot down here. I would say you're probably heading down before up. I would say your next target is probably right there. And with a lack of short interest, you are going to need something substantial to happen for this particular stock not to fall. You will need something substantial. When I say substantial, like some sort of market news, you'll need a massive market rally, which it doesn't look like that's really in the cards. But who's to say whether the market can rally massively? This isn't a heavily shorted market. In general, this is not a heavily shorted market. You've got to recognize that fact. That also, from a market standpoint, makes it highly unlikely that this market's going to have this massive rally into the end of the year. Now, it is an election season, And you can think all you want that this stuff is fair and and uh, and based on fundamentals if you want to live in fantasy land or the follow the yellow brick road or something like that. But the fact of the matter is, the current administration, which I don't even know really who that is at the moment. Not that I care, but I don't know who that is. We'll call it a month out, everybody. So let's just say 24 2024. Not that I care about who that is, but I noticed that Kamala, when she talks about the current administration as though she's not a part of it, which to me is odd because she's the vice president of the United States right now. But regardless of who's running it, listen, we're going to call her the incumbent for argument's sake. They certainly want the incumbent to win, and so they certainly want to show a strong stock market, which is kind of funny that things do kind of go that way, but they do. All right, so remember that you have to keep that in mind. So it's not that the market can't keep rolling. I don't want you to think that it can't, but there's not any without short interest and like significant amounts of short interest. Where you have as many shorts as you do long. It's really hard. LHX and Philip Morris, LHX. Okay, let's see what we see here on a monthly. Without a significant amount of shorts, it's real hard to get markets to pop. Okay, LHX looks like, and I'm probably not even going to take this. I'm not even going to take this much further. LHX, you have a lot of volume down here in 08 and 09, of course. And the wild thing is you're getting the same amount of volume right around the price levels you have now. L3Harris Technologies Inc. I usually don't even like to know what a company does. Truth be told, if you know what a company does, you're gonna be biased. You will be biased. You can't help it. We all are. Let's see. Do we see anything on here? We see this price move from 190 to where we sit 230, probably by this initial this big move here in volume trading activity, but it's really dried up. There's nothing going on, and there's nothing going on in the market. I have to tell you that, in general, I see market weakness. I want to be very, very clear about that. And like with this company, I'm not going to be able to pull a target for you. It doesn't look like. I'm going to keep zooming in anyway, but it looks like there's a lot of selling going on right now up here. And if they're selling, there is not. I can tell you now, in a general market sense, there are not buyers right now to catch a falling stock. You might get people to cover their shorts, and that's happening. But actual buyers, the market just doesn't look like it has any, which is why I don't think it has anything to do with the Fed comments. I personally do not think it has anything to do with the Fed comments. I think that we have a lack of buyers simply because prices have risen so far that it doesn't make sense to buy here. I'm going to leave this one alone. There's just not any really good targets here. I mean, I'm going to give you a target of what, 230 or 229.61. Doesn't make any sense. There's no real downside target that I can point to. There's just nothing here. This price will probably drift, which isn't really far below it either, unless you come out a little. This just really isn't a stock I would have anything to do with. Here's your breakout price, and maybe you come back here to 215. Maybe you go a heck of a lot lower. This is a lot of volume. I can tell you this, everyone. This right here, this is a lot of volume at a high price. I'll even notate that. A lot of trading activity, volume at a high price. What do you think that is? I mean, look. If you're not sure what that is, I don't know what to tell you. And for those of you that are just new to tuning in, when you have a lot of volume at a high price, that is professional investors, traders, desks institutional traders, the more knowledgeable hands of the market selling. You are not going to find the more knowledgeable hands, institutional traders buying at highs like that. And then consequently prices fall. That's not going to happen. Granted, that's up at 248. You're sitting at 229 now. Still. Okay. Now, what do we have next? Let's take a look. What do we have next here? We have LHX. We have Philip Morris and BDX, and then Mastercard. So let's take a look at Philip Morris here. Go out to a monthly. Woo, look at that run. What's Philip Morris doing over there? Figure out a way to grow new tobacco? I'm just kidding. I know they do a lot more than that. Well, they broke out for one, right? So they broke out. That will typically create buyers. I don't see a circumstance where I go, oh, wow, look at all those buyers there. I don't. Remember, there's a very, very light short interest here. There may have even been some covering to generate this move. I have no idea. Here's some volume up here. Let's just keep zooming in. Well, there's some up there, 126. There's something down here at 107. You can see selling up here. This is a 30-minute chart, everybody. This is selling up here. All right, relative to the backdrop, you definitely have selling. Wait, I got the wrong thing here. You should see where this is kind of stand out in trading volume. It's at a high price. Most likely, that is selling. That's all I'm going to say on Philip Morris for the time being. I don't think there's really too much else to say about it. That's what it looks like. There's not a lot of short interest. There's not a lot of you're not going to get a lot of downward pressure on this thing, but it also it looks like an increase in activity at these high prices. Increases in activity at high prices, folks. If you're new to watching me and you're new to kind of seeing learning about volume and price and learning about what volume and price actually means on a chart. When you have a lot of volume at a high price after a large run, and this particular company has had a very large run. I mean, this is big. Like, just call it. I mean, from the low here, you're what? You're at 90. You're at 90 to 130. That's a 50% run. Okay, this thing, like saying it's due for a pullback is generous. And now you see a lot of volume up at a high price. You better pay attention. So we're going BDX. Let's do Mastercard. Let's take a look at Mastercard. I'd love to see what's going on there. You think somebody's betting on people needing credit, huh? Yeah, I'd say you're right. And I would also say they do. So, yeah, and 20% below you is the breakout price. Although, when it broke out, it definitely broke out from here. Maybe it hasn't come all the way back down to this 400 mark. It hasn't. Let's zoom in a little bit more. Very low short interest, so very little pressure. But that also means that the company actually has to produce in order to have a run up in price. And wouldn't you know, with as broke as the American public is in general right now, they definitely are they're definitely going to have some fundamental strength. There's nothing better for a credit card company than people that desperately need credit just to buy food. And that is what we have right now. Contrary to whatever crap is said on the internet, people right now, families specifically, when you're raising a family, it's one of the toughest times financially for you in your life. Unless you're extremely wealthy, or if you're extremely poor. I mean, if you're extremely poor, it doesn't matter either, right? You're extremely poor. You're extremely poor when you have a family. Um, but if you're extremely wealthy, it doesn't matter because you never have a problem with money, whether you have a family or whether you don't. It's an interesting thing between the very poor and the very rich. They live very similar lifestyles, just on the opposite ends of the spectrum. But for the average person, when they're raising a family, they're their brokest. That is when their expenses are the highest. That is when hopefully, work is secondary to being with your family. I know for me, it most certainly is. I want to spend as much time with my kids as I possibly can. Work is definitely secondary. I don't like financial stress, but I'm definitely willing to be under financial stress to spend time with my kids, show them the love and compassion that I didn't receive, and support them in everything that they do. Most important thing you can do, in my opinion, for your children is that. I think money is great, and money a lot of times will flow from hard work, right? But don't ever fool yourself. Well, let's look at Eli Lilly and thinking that building a business isn't exactly that. It's hard work and long hours. That's just the way it goes. For a particular group of people, they'll call long work and hard hours going out to dinner and mingling with their friends. But for those of you not from that, from the financial stratus, and there's nothing wrong with that. That's fine. That really is their work, is networking, and networking with people that can help them, which is the most intelligent work they can do. I'm not knocking that, just so we're clear. Look at this run. Well, you have something out here at 466 though. I mean, this is way below you. This must be August 5th, yeah. You're back at new highs with Eli Lilly from August 5th. It's rolling over, low volume. Let's zoom in. But for those of you that hard work means, being on the computer away from home, not talking to your family, kind of stressful, whatever you do to interact with the public, right? Some people cold call, door knock, seminars, whatever you do to interact with your potential clients. If you have to do that and to build a business, you're going to have to do a lot of it. And that's the way that goes. You have to have direct interaction with people. That is why I do these lives, because I view this as a way to not only demonstrate my skill set, but also, I mean, to an extent, you get to know who I am a bit. Yeah, Eli, look, I don't have any real targets to give you here. I'm going to look at Abbott Labs next. Eli Lilly looks strong. It definitely, you know, let's go look at it from a daily, from a monthly perspective. Yes, that's parabolic, but even from a daily, I suppose. Look, you have 100% run up here. More than that. I mean, more than that, you're 350. You have a 300% run up in this company over the last year, year and a half. Last year and a half. That's huge. That's a hard thing to buy into, everybody. I just want to let that known. I don't see any real areas of selling. I don't see any real areas of buying right now. But I will tell you that buying after something's run up 300% in a year and a half, it's a big bet. What do we see here? Well, we see a company that hasn't come back to its 2021 highs. Abbott Labs is what we're looking at here. And that would be general market weakness. And it still contains it, kind of stuck in this range. It's at the high end of the range now. At the lower end of the range, it appears there's volume. Let's zoom in a little bit more. But yeah, to me, everybody, I mean, being with my kids, when you're a family, financial stress is probably part of it. Unless you're one of the few that has the ability to be home and work, but work when you're at home. So there's this new thing with remote working where, like, oh, I'm at home, but when you're working, the truth is you're not present, right? And neither am I. It's not your fault. You're working. So working from home really has no benefit to the family aside from the fact that you can have lunch together. Look, it filled this gap. This is not good. So I would say this would promote let me outline this. This would definitely promote the idea that this stock is looking to head down. So let's make this red. And this is an indication of a downward price move. So let's go ahead and highlight downward. There we go. Price move. All right. So that is why I was mentioning Mastercard and credit, because there are a lot of people living on credit. So Mastercard is one of those companies right now that, with as broke as everybody is and as high as inflation is, regardless of what they're saying in the media and on social media, the fact of the matter is prices are insanely high. Most people can't afford very much at the moment. It has not bounced back. I don't care what chart you're looking at. Look, statistics don't lie, but liars use statistics. Always remember that. Let's see if we can get a price target on this thing. So far, I don't see one. Yeah, you can mold and bend statistics any way you want. We're going to remove the price of groceries and the price of gasoline from the inflation data. Because it's too volatile. It's just too volatile to include those things. Also, those happen to be two of the biggest pieces of that, and housing are the two biggest pieces of most people's ability to pay. So what do we have? We can look at ECL and BDX. ECL, BDX. Let's see what we got here. ECL. I wasn't trying to lecture on prices, everybody, but the fact of the matter is, when you have a lack of short interest, those fundamental macro situations matter just as the fundamental micro situation within the company matters. It really, really does. So it did break to a new high after 2021. Let's zoom into a daily. And there is a price target down here, and a darn good one. And I would certainly be looking at it. So there's a nice price target right here around 205. Let's zoom in. 4-hour chart. All right. 1 hour filled a very big gap down. So this was most likely a hunt for supply. Run up. And you have to keep in mind that there is general market weakness, but we are trying to evaluate these companies outside of that fact. There's that drop. It rallies really hard. Maybe trying to bolster price one last time to get a little more selling in. But I don't see a lot of selling at these highs. This is what I've been talking about, everyone. Here, let me pull up a daily. This is what I've been talking about. There is general market weakness, but let me show you something. There's more or less a lack of buying up here than selling. Now, this right here is probably some buying and selling. This right here is most likely selling. Yeah, but this would be buying. I mean, 223, 250. This is a nice move. That's a 12% move. There's just a lack of interest right now. So that doesn't typically lead to long, hardcore, deep corrections. That could develop, but in a market sense, this is what you're looking at in the market. Now, do I think you're going to run back down to 205? Most likely I do. So I'm going to go ahead and put that up here. Probably by year end. I'm going to put 12/1 as the target date. Oh, you know what? Wait. ECL, we're going to target price. I skipped a step, and then I forgot how to do what I've been doing over and over and over. Well, didn't forget, but I didn't do it. Now, did I? 9/18/2024. And for any of you watching, you say, hey, why is this guy, if this guy's a trader, why isn't he trading right now? Well, I'll tell you right now, there's a lesson you learn as you get older. And one of the largest lessons to be learned is when not to be involved. Sometimes you make more money waiting for something to develop than you do being in there every day swinging the bat. I can tell you, I was trying to force things the last couple of days, and I made no money this week trading futures so far. And today is a gambler's delight with the Fed speaking. And I decided, and I knew this on Monday, I just tried to force a couple things. I didn't lose anything, I just didn't make anything. I know today is gambler's delight, so it's really easy for me to stay out of days like this. Traditionally, what will happen is there'll be who knows what kind of erratic behavior will occur when the Fed speaks. But that erratic behavior typically just resets anyway. So, what I mean by resets, did I look at BDX? Let me pull it up. I should know pretty quickly if I did. What I mean by that erratic behavior resets is like you'll get a large push down or a large push up, but it just typically comes right back to the previous trend. Now, right now, what is the trend? Well, that's the question at hand, isn't it? Oh, look at this. Okay, we're not going to comment here. This is sitting at this range at a high since 2018. If anyone ever asks my opinion of what it means when prices sit at highs over long periods of time, traditionally that means selling. I don't know what Becton Dickinson and Company does. There is not a lot of short interest here. So I would never own this. I don't even know what they do. I don't care. For me to see this, it looks like what's this? Yeah, there's just nothing here. Okay, well, I didn't really need to take a look at this. I'm going to stop the share now. Here's some stuff up at 250. This isn't even worth looking at. Let me come back over, and we are back together again. Okay, so I think what I'm going to do tomorrow is I'm going to review what happens today with the Fed, and I'm going to talk more about that general market weakness. And what that actually means and what it looks like. It's just that the NASDAQ was our leader in the rise. Now it's become our leader in the fall. The S&P was trailing the NASDAQ. Now the S&P hasn't been able to make new highs, but it got back up there. So it's definitely taken over lead from the NASDAQ. And then the Dow itself is making new highs. So that's your actual leader. That's only 30 companies. It's far easier to move the Dow's prices around than it is the NASDAQ or the S&P. So when I see that, that is an indication of general market weakness. I'll talk about that tomorrow. I've been talking about it for the last week and a half. For those of you that join me, I always appreciate it. Please like, comment, share this with someone that you think it would be helpful to let them know that I have these lives up every single day. All right. So remember, everybody, if you're not good up here, you're not good anywhere. If you're having a hard time, get outside, take a walk, take a look at the sunshine, smile like an idiot for an hour. Fake it till you make it. It works. Trust me, it really does. And remember, you haven't failed yet. How do I know? Because you're still here, right? If you're still here, you haven't failed. If you haven't failed, why would I ever think you're going to fail now, right? If you haven't failed, why would you ever assume you're going to fail? You're going to win. You're going to keep winning. You've been winning. All right. So thank you so much for joining me. And remember, the most important thing that I say on this show is that every day above ground is a good day. I will see you all soon.